Management Academy. On this segment, what I would like to do is review the algorithms that we produced and posted last week. So if you see the homepage of our website here, on the left side, you can click on Updates, and you can click on the Global VC Price Momentum Indicator Report. This is the latest report that we published this morning for ETFs, and we will take a look at this in a few minutes. But if you click on my name, Patrick MontesDeOca, it will give you all of the reports that we've published on this website. And if you go to the report that we published last week for the gold and silver market, what I would like to do is just take a minute to review what the report was telling us last week as we came into the past week. And this report was published basically on November the 8th. So let's take a look for a minute here and just review quickly what this report was indicating as we came into this week here. For the gold market, the contract closed at 1178 on November the 8th. And it was telling us basically that the momentum was bearish, the moving average was 1211, and closing below it indicated the possibility that the market could come down. And it was telling us that the weekly price momentum indicator of 1163 was the pivot point for the week. If we came down through that we want to cover the short positions at about 1146 to 1114. Let's take a look and see what happened last week as we came in basically into this week here. And on November the 8th, basically, last week on Friday, we had a nice move up here with the market closing at 1178, but it told us that we could come down to as low as 1146 into the coming week here. So let's see what the low was. On the 11th, we made a new low of 1145.50. That was pretty close. And this indicator said that 1146 was a buy, and so we picked up the first trigger at 1146, and it told us that if you buy long at 1146, that your target on the upside would be, first of all, the target would be 1163, and we recommended on the last podcast that we did that if you get a chance to buy it at 1146, your first target would be 1163. So you could have taken some profits here as well and wait for a close above 1163 or a penetration of 1163 for a target above into the 1195 to 1212 level. The high so far was 1187.90 that we made basically on Friday once again, closing above last Friday's close and closing above for the second week the moving average, the short-term moving average that we're looking at, which is the 1167. And so we picked up from 1146 to a close of 1187.90, more than $40 on a trade, or $4,000 per contract if you were following this algorithm. For the silver market, last week's report was telling us that the market was a little bearish still, and that this bearishness would be negated on a close above 1719, but the 1569 was the level of support or the pivot point for the week, or the metrics that if we came down below 1569, we could come down to as low as 1516 to 1451. So let's take a look and see what the low was last week. And on Friday, a low of 1525 was made. 9 cents away, obviously, from our ideal entry point. And once the market broke through 1569, as I said in my last podcast, that it would activate the uptrend for the week, and that the target would be 1634 to 1687. And so the high for the week was 1638. And so you can see the synergy is tremendously accurate in providing you a guide, a map, a mathematical map for you to use your judgment as a trader to execute at the optimal levels using the algorithm here that we trade ourselves. So you can see now that the market came down and has picked up quite a bit of buying interest at the lows here recommended, and that we have closed above the moving average and above last week's close. So we basically had an inside weekly key reversal, which is the second week in a row. The previous week we had an outside key reversal, which was very bullish, confirming that this week we could see once again a follow through to the upside, as indicated in the podcast as well. Now, let's take a look at the report for this week that was published early this morning, and see what we can expect as we come in next week. And what I'm going to do here is I'm going to post the algorithms for next week, and let's see what they tell us. On November the 14th, the December gold contract closed at 1186. The market closing below the 9-day moving average of 1206 was confirmation that the weekly trend is still a bit bearish. But a close above the 9-day moving average would be actually negating the very short-term trend signal here. And here you can see the market pretty much, I think, crossed above the moving average, and the shorter-term moving average is indicating the market has reversed to an uptrend momentum. Now, with the market closing above the VC weekly of 1175, it confirms that the price momentum is bullish. And it closed above the previous close of last week. And for the second week in a row, we're closing above the pivot point at 1175. And you see this is the green line here, that is the pivot point for next week. Now, closing above here puts into place the sell one target of 1204. So it's telling you to take some profits, or the target, the first target for next week is 1204. Second target is 1222. So coming into next week, you want to have orders, if you're long, to take some profits at 1204 to 1222 if you're swing trading in the December gold futures contract. If the market comes down below 1175, it tells us that it could come down to 1157, but it starts telling us that we should be looking to cover that short, starting at 1157 all the way down to 1128. The blue lines here are the optimal levels to accumulate long positions, and I would not recommend taking the short side at these levels as the energy of the market, or the path of least resistance, is beginning to build a major level of support, as indicated by our indicator, the RSI, that we use to identify the momentum of the market. And it's given us a very, very clear picture in terms of what to expect for next week if we do swing trade the December gold contract. I'm going to take a look at some other derivatives that we are using basically to manage the risk outside of the futures contract margins, and we will take a look at that in a minute. But first I want to take a look at the silver contract and find out what it's telling us for next week. The December silver futures contract closed at 16.31, and with the market closing still below the moving average, 16.94, confirms that the weekly trend momentum is bearish on the weekly average, and a close above the 9-day would negate the weekly bearish short-term trend to neutral. When we take a look at the moving average for the day, you can see the market already has closed above the daily moving average, and we're looking for the market to close above the weekly moving average to begin to confirm the acceleration that we're looking for on the weekly basis. The weekly momentum indicator, the algorithm is indicating for us that with the market closing above the pivot point of the VC indicator of 1598, it basically confirms that the price turned bullish, and a close below 1598 weekly, it would negate the bullish signal to neutral. If we cross, or if we come down below 1598, it's telling us to cover that short position at 1558 to 1458 levels and go long on a weekly reversal stop. And if you go long in this vicinity, use the 1458 as your stop level on a weekly basis and look to take some profits between 1671 and 1711. And so the close that you see here of last Friday is indicating a target on the upside of 1671, which is clearly stated here as sell 1 level, and the sell 2 level is 1711. So you want to look at these levels and use them if you are swing trading in the December futures contract to take some profits and basically lock in these higher levels here. But if the market comes down and penetrates 1598, it would be a bearish indication with a target of 1558 excuse me, all the way down to the 1458 level, which will mean that it would be making a new low. The previous low that we made last week was 1504, and the previous week. This past week, the low was 1525, so we're making higher lows, and I'm not so sure that this market will come down below that 1558 level if it is tested, in my opinion. The path of least resistance that we're looking at here in the silver market is basically to the upside. Now, what I would like to do is to take a look at a derivative that we are using to maintain a position overnight in the metals markets that is producing for us some truly remarkable returns already as we started trading it just last week. And we've been suggesting actually subscribers that they take a look at this ETF, which is basically Jnug. It's the Direction Shares Trust Daily Junior Gold Miners. And one of the reasons why we are using this ETF to trade is because it offers the volatility of a futures contract. It is a very aggressive ETF that you should be aware of. It's the leverage is 3 times the leverage of the underlying instrument, which is the GDXJ, which is the gold miners. And this gives you 3 times the volatility of the underlying ETF, GDXJ. And one of the reasons why we're trading Jnug is because as a trader, what we look for is volatility and obviously the liquidity and a risk-reward ratio that ideally would be far above the average. And if you take a look at this ETF here, for example, the high has been about 43 that was made back in March of this year when gold traded about 13, I think it was close to $1,400. And it trades in a range of about 300 to 400%. From March, it came down into June to a low of about 1379. In about 30 days to July 10th, it went up into that 36 area once again, which is a phenomenal range. And from there, we've come down to a low that we made a couple of weeks ago of 284. And we seem to be breaking out above the daily moving average of 424. Closing above 424 on Friday was a very good indication that we've seen some kind of a bottom. As confirmed as well by the RSI that we track in using to identify the reversals of the momentum patterns that are beginning to be identified. Now, if we add the codes for next week, let's take a look at it and see where we could go as we come into next week. Let me see if I can adjust some of these prices here for a minute. And let's take a look at the report that we just published this week and see where we could go coming into next week using Jnug as a trading instrument to hold some positions overnight. As I said, one of the reasons why I feel very good about trading this is because I do trade in the futures markets, and any futures traders obviously has to manage the risk of a futures contract. And this ETF allows you to stay overnight and not be subject to that. Obviously, if something does happen in the futures markets, you're going to be subject to in terms of price. But you're not subject to the liquidation, the forced liquidations that go on in the paper market, all the regulations that go in there. And it allows you to maintain a position all through the trend if you have been able to identify a trend. This is a phenomenal ETF that produces some aggressive returns. And if we take a look at what we can expect next week, the 401 basically is the target zone for the VC indicator that we're looking at. And I think that the price of about 401 obviously is the metrics, the pivot point for the week, and market closing about 426 is basically closing above it. So the upper end of the target for next week is the 482 level to 537. And the 401 level basically is the pivot point for the week, that if we come down below 401, it's telling us to cover those short positions and reverse to go long at 345 to 265 if we do come down to those levels. The previous low was 284, and if the market does come down to this B1 and B2 levels here, I would say to you that it would be a very, very high probability trade, and we are suggesting our subscribers to add to their positions if given a chance at those price levels. Let's take a look a little bit at the Fibonacci retracement that we have here, basically, and from the recent lows here that we made last week, and see what we can expect for the next couple of weeks in terms of targets, Fibonacci targets. The 23.6% retracement is at about 1245. The 38.6% retracement is in the 1830-35 vicinity. A 50% retracement would take us all the way up to about 23% retracement, and a 61.8% retracement, which would be the golden ratio number, would take us up all the way to about 2788. Closing above 2788 would give us a target of about 34 and 35 in that vicinity. And of course, closing above there puts into target the 4332 level. And if we close above the 4332 level, it targets a price of 68.29 on the upper end of the Fibonacci extension of 1.61% Fibonacci golden ratio objective. So there is a lot of room still for this ETF to appreciate. And in gold, just if you take a look at what gold was trading just back in July, which was in the 13 vicinity, I believe, at 13 handle, would give us about 36. When you can buy this ETF at 426 or under 4, and you're looking at the upper end of the range of 43, you're looking at a better than 1,000% return, which is an incredible, incredible objective to accomplish. And if you look at the past history of this instrument, this would be one instrument that can accomplish these objectives. But you must be aware that it is an aggressive instrument for aggressive traders only that are looking to build equity aggressively in a short period of time. So coming into next week, once again, let's take a look at what the gold market is saying. Basically, the close basically was bullish for the gold market, closing at 1186, targets 1204 to 1222. And for the silver market, obviously, it looks bullish, targeting the upper end of the range of about 1671 to 1711. This is Patrick MontesDeOca with the live trading room that I hope we have been able to assist you in identifying some of the swing trading opportunities that we basically have available as we come into next week. Until next time, my friends, have a great trading week.